Hi everyone, welcome back to our real estate closing costs course. I'm Ricardo Teran, your title shopper and co-founder of Folio Title and Escrow. In this video, we're taking a deep dive into closing costs, breaking them down into categories and comparing cash and finance purchases, as well as explaining title insurance rates in Florida. So let's dive right in. First, when we think about closing costs, I like to break them down into 4 categories. The first category is title-related expenses and closing services. These include the costs of essential closing services, such as settlement fees, document preparation fees, wire and courier fees, lien searches, title searches, estoppel letters from associations, as well as surveys. Title insurance is also a key part of this category, and in Florida, these rates are set by the state. There are owner's title insurance policies to protect owners from future claims on title issues that may have occurred before the owner took title. There's also lender title insurance policies to protect lenders. Calculating these rates is based on a bit of a complex formula related to the purchase price of the property in the case of owner's policies and when financed or refinanced on the loan amount. On properties under $1 million, owner's title insurance policy rates are approximately 0.5% of the purchase price. Now let's talk about a second category of closing costs, which is government recording fees and taxes. Every property transfer requires documents to be recorded in the public record, with fees based on the number of pages. As of 2025, recording fees are charged by the county recorder as 10 cents for the first page and $8.50 for each additional page. You can also expect a small additional charge for electronic recordings, which speeds everything up. You'll also see some transfer taxes on every real estate transaction, including documentary stamp taxes paid on deeds and mortgages, and intangible taxes paid on mortgages. These are charged by the state of Florida. You can find a detailed breakdown and an explanation of these on the Florida Department of Revenue website. Now, there are 3 main transfer taxes to consider. The first, the documentary stamp taxes on the deed, usually paid for by the seller at closing, is calculated at 70 cents per every $100 of value of the purchase price, except in Miami-Dade, where it's 60 cents for every 100 of value, plus a surtax of 45 cents for non-single family home dwellings. So for example, in a $300,000 property, you can expect $2,100 of stamp taxes in Miami, outside of Miami-Dade County. The second is the doc stamps on the mortgage, which is calculated at a rate of 35 cents for every 100 of loan value. So here, you would take the loan amount divided by 100 and multiply it by 0.35. The last is the intangible tax on the mortgage, which is charged by the state at a rate of 20 cents for every 100 of loan amount. So for example, on a $300,000 loan, that'll be about $600. Let's now talk about the third category of expenses, which are loan-related expenses. These are unique to finance transactions and cover processing and underwriting fees, appraisals, which are often paid up front, credit reports, and mortgage points. The fourth and last type of closing expense are the lender-required prepaids and escrows. These prepaid expenses and lender-required escrows often confuse clients, so let's break it down. Prepaid interests covers the interest from the date of closing to the start of the next payment cycle. Homeowners insurance is usually a prepaid expense for a full year, the first year at closing, with lenders usually asking for an additional 3 months of premium to be deposited at closing and held in escrow. Lenders also ask for property taxes to be escrowed, which can range from 3 to 11 months of taxes required at closing, ensuring that lenders can pay taxes on time and protect their interest in the property. These escrows protect the lender by ensuring that critical payments like taxes and insurance are always covered, reducing the lender's risk if a borrower defaults. Now, these prepaid items also mean that a borrower needs to be really clear on how much money they will be required to bring to closing. Now, moving on, one of the most frequently asked questions that I get is, what are the differences between closing costs in cash and closing costs with a mortgage loan? So let's compare cash and finance closings. Cash transactions can range in closing costs from about 0.5% to 1.5% of the purchase price, with higher priced properties seeing lower percentages of closing costs due to the fact that fixed costs on transaction are more diluted on larger transactions. Finance transactions range from 3 to 5% due to added lender fees and points, doc stamps on mortgages, and prepaid and lender required escrows. So I hope this breakdown of closing costs into these 4 categories was helpful for you. Understanding these costs allows buyers, sellers, and investors to better plan their finances for the purchase or sale, avoid surprises, and trust your guidance. Explaining these differences to clients is crucial. Please don't hesitate to contact Folio for any further explanation, and we invite you to share our educational resources on these and other closing matters with your clients. In the next video, we'll cover how to understand closing and settlement statements and answer common questions about these essential documents leading up to the closing.